Alrighty. Good afternoon, everybody. I'm assuming this thing is recording. I hope so. Anyway, I wanted to go through the trades on the NQ and the price action and what the market did today on the NQ. It was a pretty interesting day. We had a little bit of a short in the morning, and then we had a couple of nice long moves, and then it kind of chopped after lunch for the end of the day, which is unfortunately pretty typical. Anyway, we're sitting at market open. I've got my chart up. I've got my moving averages. I put a 313 and 39, which I use for both for crossovers and for confirmation of movement. Say, for example, for trend change. My 89 EMA is is this orange line here. I've got my fib levels drawn on here, you can see, and I have London high and London low. And the first thing I usually do in the mornings is I draw a fib from at right around market open, or right before. I could have done it before. I draw a fib line from market high, or sorry, from London high to London low, and I want to look at significant levels. For example, there, 47.7675, and down to, what's this guy, 47.4525. Okay, so I'm looking at some significant levels in the market of upside, because general trend is upside. Okay, until we hit overbought here. So we're looking at 127% and a 161.8%. Now that 127% line, which is at 47.8525, you can see that unmarked Murray math line right there. So I'm pretty sure that's going to go back up and touch that, at least touch it. It may go back up here to the 161.8, and the 161.8 is pretty important to the market. You'll see 61.8, and you'll see 161.8 levels. Okay, so now I've got my fibs drawn. I got my Murray math lines on. Like you can see we've already hit overbought. You can see the resistance zone here. You can see your range bound stuff here. Major support resistance line, which is what I'm going to be looking at. I'm going to be looking at major support resistance line initially. Support, price action usually, it tends to go from resistance to support, support to resistance. Those are pretty safe trades going back and forth. The general trend of the market is up. This tells me that there's more room in the market to go up. 4,800 is a pretty significant psychological level, but we still have room to go. So let's start looking at, I've got my clear method trend line, which basically says when price action tends to hit, oops, I just got a text message. When price action hits one of the, it goes above these candles, then turn the candle cyan. When it goes below, indicating a trend change, turn it magenta. So we have, see, which is kind of cool. We got a magenta candle here, and then we had this nice long move down. Okay, we had a cyan candle, we had a magenta candle here. It didn't work out, and the reason why was because we're running right up against that major pivot. Okay, same thing here. We've got one here, but you're down at the bottom of support. There's not a whole lot of room for that guy to go. So, and generally speaking, you can see the chart that he's already gone through. It's past reversal, et cetera, et cetera. So he's on his way back up here. So anything that would be going short would be counter trend until we come up here in resistance and overbought and reversal. Then you want to start looking at the market coming back down. So, and that's exactly what we're seeing here. So the market come back down. This is a pullback. I would not take that trade. Just simply, even though it's a long, it's signaling. Number one, I'm running right up against that 61.8 line, which the market likes to bounce off of. The 100% line is right up here, and these levels are right up here. But I've got a lot of this resistance right in here. So I'm still hitting the resistance zone. Once you hit overbought, this zone right here converts to resistance pretty easily. So as you can see, it tried to push up, but it could not push up the resistance zone. Tried to push up again. It's at the bottom. Tried to push up again, and here we go. We have a cyan candle. The buyers are stepping in and going, well, let's see if we can buy it up a little bit. But I wouldn't take that trade simply because you're running right up against that resistance right in here. Okay, so what happens is, let's see what happens. Does it go up or go down? No, it goes down. You can see I'm stopping this thing. I'm stopping the replay so that you guys can see what's going on. You can see what I'm seeing, what I saw this morning real time. And I'm just speeding it up because, you don't want to sit here for 6 hours and watch grass grow and paint dry. So, so it's coming back down. I expect it to come back down to somewhere around this line before we turn magenta, which would signal short. What generally happens in the market is that they'll pull, they'll pull back. Say for example, if they're going longer up here, well, what generally happens, they'll pull it up and then test it, pull it up and test it, pull it up and test it, and then they'll have a nice deep pullback and then they'll let it go. It's kind of like a bow and arrow, where you're testing the resistance of or the support of the bow or the resistance of the bow. You put an arrow in, you kind of pull it back a little bit and you let it go, and you pull it back and let it go, and then you pull it all the way back and then you let that puppy fly. So, and that's that's what we see. That's what we see a lot in the market. So let me go ahead and play this. You'll see that. So we got a nice deep pullback. I just had a cyan candle there, and I'm trying this at 30 speed, so it's going pretty quick. So what I would have done here is, and in fact, David in our trading room says he's going short here. Okay, fine. So I'm going to go short there, approximately. I'll put my stop. I could put my stop at either the top or the bottom of support. I'm just going to leave it there for the moment, and I'll put my fill at a major support resistance, because I think price action is going to go back up. Even if it goes farther back down here, at least I've got those ticks right there. So I'm going to go down here, and I'm going to put my fill at that major support resistance line, which is at that 0% line, which happens to be right around the London low. So let's find out what happens. You'll notice these major lines, major support, major pivot, that sort of thing. The market does like those, and it likes a lot of these Murray Math levels. Generally speaking, as you can see here, Murray Math levels will pull back through support, arbitrary. It may pull back to oversold, it may pull back to bottom support, it may pull back to reversal. Once it starts upside, once it crosses that support level, it tends to not stop until it hits the bottom of the resistance zone, and that right there is a pretty safe trade. I see that every single day. Now you'll see that at midnight it didn't work out here. It came back up, it crossed through support, and then came back down. You would have lost that trade because you would have put your stop loss, generally speaking, at the bottom of support, which is about 5 points on the NQ. So let's see what happens. Going to hit play here. Bounces back up, and where are we going? Bam! Right down to, we're a little bit of a pullback there. But see, down, okay, now we got filled at major support resistance. So we're filled. We're done with that trade right now, okay? Let me pop this back to 10 because it's going a little bit fast. That was a 48 tick trade. That's $240. $240 on the NQ, which isn't bad. That's not bad for a nice little short trade. Got in at the bottom of the cyan candle. Actually, when it popped back up here a little bit, got at the bottom of the cyan candle, which would have been at 47, 57, 25 or so, and then just wrote it down to the major support resistance. Okay, so now we're done. We're done with that short trade. I don't think it's gonna go much past that. Okay, so let's see what happens. Yeah, it goes down. Okay, now it starts filling up. We're a little bit range bound. He's consolidating right now. He's going to go up the top. I got a cyan candle. I'm not buying it. See how long those candles are? Wow, those things are real big. And what I'm looking for, I'm going to pause it here. What I'm looking for is a short. I'm looking for a little cyan candle there, or a little magenta candle there, signaling a short or a long. The big ones are not nearly as reliable. You'll see I got a short one there, I got a short one there, I got a short one there, I got a short one there. Okay, and these candles got a little candle there, a little candle there. Those are much more reliable in the clear method study. And there's a way to automate that on your chart, and I'll show you that at the end of the video. There's a place called Sawtooth Trading that I use, and I'll send you guys the link here in a second. So anyway, so you're gonna play this thing. We're gonna go through. I'm sitting here watching. Okay, I got a small cyan candle. Okay. I'm watching this thing. I'm watching it because I'm waiting for the long, because as you'll see, he hasn't popped out of this. He's tested that almost to the bottom of that range. He's testing that. He's tested that, what, 4 times? Can't break it. So we're pretty much going to go upside. And you know, if you wanted to be a little more aggressive, you could have taken it. You could have taken the long at the support resistance and sat it out if you wanted to, or sat out the pullbacks down here if you wanted to. I tend to play it and look for the signals, look for a nice long or a nice short signal instead of sitting here getting caught in all this choppy nonsense here. So, okay, so we got a nice cyan, small bodied cyan candle. So I get into a buy position right here. Okay, right around the top of the range. Actually, ideally it would probably be right around the top of the candle, but you get into a buy position. My stop is going to be moved. I'm going to move my stop to the bottom of the range, 47, 41, 25. So that would be just because if this thing comes back up against me, I'm still convinced this thing is going to go long. I don't think it's going to go short because it's been bouncing off that level. I don't want it to come back and bite me and take me out of the trade. Okay, that may not. This stop down here may not be necessary. I might be able to put it up to the major support resistance line, but what the heck, just to be safe. That would be almost 10 points instead of a 5-point stop. I don't think I'm going to need that, but that's pretty much what I think that's what it's set up for, 50 tick stop. And when I was running in simulation, it seemed like a 50 tick stop gave me the most profit on the NQ, rather than anything a little bit smaller. So I tend to let it sit there and then adjust my stop as the trade progresses. So, okay, here's a little bit of the pullback. Bam, it went down to that 47, 45, 25. I'm kind of glad I didn't put that stop at major support resistance. Okay, now here we go. We're going up. We got a candle. I could move my stop. If I wanted to, I can put my stop back up here if I want to. So, and just leave it there and let it roll. What will happen is after it moves 50 ticks in the direction of my trade, it'll automatically move to break even +2, and that's set over here. After 50 ticks, you set it for offset and ticks triggered. Okay, break even +2 after you move 50 ticks. So, and then I just set my target at 200 ticks, and then I'll adjust it once I get into the trade. Okay, so I'm going here. I think this thing is going to go to 127, 161.8. Okay. So what I'll do is I'll set my initial stop down here, or my initial fill at 47.85.25. I'm going to play this thing. Initially, I would set it at resistance down here, and that would be a nice conservative trade. You're looking at what, 15.5 points right there, which would be a nice, that's a nice trade. Okay. But what happens? I still got overbought. I still got all this room up here to go. You know, I've hit here. So why not put it up here and see what happens? So I'm going to put it up at 127%. And let's see what happens on this trade. So you can see it's going up, going up. Still got green candles. There's a little bit of a pullback. A little bit of pullback to, what is that, major pivot 6. Bam, it hit it to the tick, and now it's going back upside. So there's a lot of upside momentum in this market. I would ordinarily get out at resistance, but as my good friend David would say, got green candles, everything's to the upside, no reason to get out of the trade. So there is no reason. So I'm going to sit there and follow it and see what happens. I think it's going to go to at least overbought, but well, let's see what happens here. So we're letting it run up, It's already hit resistance. It'll get a little bit of a pullback right in the resistance zone. It usually goes about halfway and pulls back just a little bit. Okay. See, it wasn't much pullback. There wasn't much pullback to that thing. Okay. So here we go. Going to the upside. We're almost hit overbought, which was our 47.76.75 level. $47.76.75. We're almost there. Okay, we just touched it and pushed past it one tick. Okay, Murray Math levels just shifted. Ooh, look where resistance just shifted. Wow, at that 47.85.25, 127%. So now I've got fib confluence. Look at this. Interestingly enough, I have fib confluence here between the 127% and the bottom of resistance, which is where I'd normally get out anyway on a trade. Okay. Number two, see that overbought and at 47.96.25, that 161.8. Murray Math line shifted. Since it had gone to overbought before, it's a pretty safe bet that it's going to go to overbought again. Okay, so conservative. I'm a conservative guy. I'm going to take that off at 127%. Okay, so we're going to see what happens. So we're going to play. Let's watch it go. Going to pull back to the major pivot. Kind of fiddles around here for a while. Now, okay, here we go. It pull back almost to the top of the range, but not quite. Well, at least not yet. I don't remember if it did or not. I can't remember where it went. Okay, here we go. The upside. Okay, I'm almost at the resistance point, and I could take it off there. I could take 161.8 up to the overbought line. It's gone pretty quick. It's gone 136 ticks. So what I'm going to do, I'll just take it off. I'll just take that off there, and to heck with it. Oh, you'll notice that after 50 ticks, my stop loss moved to automatically break even +2. I could move it up to, just in case, my major support resistance line right there. I could move my stop right there and just leave it. But hey, I'm almost going to get filled here, so I'm good to go. Okay, so hitting play here. Bam, okay, I'm filled. That's a 140 tick trade. I'm up 188 ticks. Okay, so I'm going to wait when it comes back down and see what kind of, because I still think we've got confluence here. So I still think we're going to hit that overbought. Okay, so let's go down. Let's wait. It's going to pull back. pull back to at least that stall weak reversal, maybe down, maybe all the way down to the major pivot. I don't know. Let's see what happens here. So it's pulling back, pulling back, pulling back. Touch that stall, weak reversal line. See, it's interesting where that the market does respect those levels. Okay, now I've got a short. Okay, well, I haven't hit overbought or reversal, so I don't believe that's short. I think this is just a pullback to go to the upside, and that's why we have not hit here yet. So anything short here, okay, anything short down here is that's just a pullback. It's a fake signal. Okay, I would not go short there. And the only reason I went short there was because David said go short. But I certainly wasn't going to go long, and I had a signal short because I was looking at the resistance, and I thought, just pick up some ticks. And I looked at major support resistance, which was down here, which is my support line now. What the heck, let's see where it goes and pick up a few ticks and put a few ticks in the bag, and then go on. So, hey, nice 48 tick trade there. Nice 140 tick trade here. That's fake, but I'm not exactly sure how far it's going to pull back. So let's find out. Might pull back to the major pivot. I don't know, but I don't have a signal to go. I don't have a signal to go back long. Okay. And again, I'm pausing this. I'm pausing this and see that nice big green cyan that nice cyan candle. I don't trust that. I don't trust these. Anytime I get a nice big magenta or cyan candle, I do not trust that at all. I trust the little bitty ones. I don't trust the big ones. And that is, you can see on the chart that's pretty much played out. So nice cyan candle. So this could be the signal for a pullback. Then again, it just turned red. So this will pull back. This will pull back. This will mess around. Sit here and wait for a minute and see what happens. If I get into a long trade, it's going to be probably right below that stall weak reversal, and I'm going to ride it to overbought. Since it hit overbought over here, I think it's still going to hit overbought over here. And there's a confluence line right there. So the safe trade would be going long at a cyan candle and then hitting the overbought, taking the overbought right there. Even though with this trade here, with this trade here, I didn't go because it was very close to the resistance, but it's pulling back below resistance and getting ready to go back upside. So this is just a big pullback here. That wasn't a pullback ready to go to the upside, but this probably is. Now we hit major pivot line. So that's a fairly safe thing. You trade a couple levels, 2-3 levels down, and then it pulls back to that, and then it starts going to the upside. That's a pretty safe place to go. You know what? I think we're going to go long. It's like the bow. You have to have enough tension on the bow to shoot the arrow higher. If you don't, it just kind of fizzles out. You can see that. Okay, I'm starting to get a cyan candle there. Okay. Boom, got a cyan candle there. So I would go in, I would set there, and I want to go up and pull my fill right to the overbought, right to that overbought line. I could run it a couple of ticks below that, but the reason I would not do that is because the 161.8 is above that overbought line. So I think the market's going to hit right in this range here, minimum 47.95. That's the rationale. Now I got to sit through a pullback here, and I would put my here's where I'd put my stop. See this magenta? See that cyan line right there, right below the magenta line? That's that clear method swing line. I would put it right below that swing line, right there. And I think I don't think it's going to pull back beyond that. So it's a pretty wide stop. It's 10 points. But let's see what happens. $200 risk here to make what? 200 bucks. 200 more dollars. Oh well. But this is, I would probably not have taken that trade overbought. This is just to prove a point to say, you know what? I believe it's going to come back up in here. So um, I would have just taken off there, right there. I would have taken my 140 plus 48. I would have taken my 188 ticks and called it a day. But I want to see if it'd go up there. And I have, I mean, I got a little bit in the bank here that I can risk. Um, so here we go. We go upside, 714, blah, blah, blah. Okay, we're at the top of resistance. Once we clear the top of resistance right there, it's pretty much done. It's going to go to the next level. So here we go. Blah, 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 blah. And here we go. Come on, baby. Push, push, push. 47.95. I'm looking for 49.795 at least. At least. Bam. Okay, that's 39 ticks. So we're into 227 ticks right there. So then it basically it went up to what, 47.85. 47.95.75. So that was what, 2 ticks away from the 161.8 level. So for all those people that say fibs don't work, sorry, but they do. Oh well, it is what it is. Moving averages work. Oh, by the way, I wanted to point out one of the other things that I had looked at was down here. To get into that long trade, it popped up above the 89 EMA. The 89 EMA is pretty significant in most markets. I had an 89 EMA. I had my moving average crossovers right here. So anywhere right in this level, anywhere right in here would have been anywhere right in there would have been valid for to go long. So I got moving average crossover here. I got a moving average crossover here. I got a moving average crossover here to the upside. My 89 EMA is trending up. So everything tells me, and we're bouncing off support. So everything tells me, hey, we're going from support all the way up to resistance, and that's exactly what we did. So, guys, I see that happening in the market every single day, time after time after time after time. So anyway, that would have been the morning session. In the afternoon session, just kind of chopped. It was choppy. I don't. Right now, it's it's 11 o'clock in New York, or when I'm running this chart, it's 11 o'clock in New York. I would have been done for the day. I mean, heck with it. You walk away with your 227 ticks, which is, well, on this particular one, 227 ticks. Let's see. So I got 227 ticks divided by 2 times 10. That's 1135 minus 10 bucks. So you're looking at $1,125 for that trade. I mean, heck with it. I'm done. I'm done for the day. And it's 11 o'clock in the morning. 10:30, 11 o'clock in the morning. I can go off and enjoy my day. It's 8 o'clock here on the West Coast. So I got the entire day to enjoy with $1,100 in my pocket. Anyway, and by the way, here's the wrap up. Let me switch back over to this chart. Here's the wrap up for the day. And you can see where here's the long reentry down here. I had marked up the chart before. I wasn't, I got a bad memory, so I wasn't really remembering where exactly I was getting in, but I was basing it. You can see I wasn't basing it off of, oh, well, I'm remembering what was on this chart over here. I was basing that on these clear method trend lines, and where am I? Where's my Murray math levels? Where are my fibs being drawn? Okay, where are my fibs based on the London high, the London low? Where are those clear method candles? And you always wait for those candles to form before you do anything. And where am I in relation to the levels? Like, for example, like I said here, I would not have taken the long here. The short was a pretty good one right here. Went right down to that what turned out to be major support resistance, um, which turned out to be that guy, and then everything shifted up later. So I think I explained the rationale behind those. Don't take this one. I would have taken that one. Um, I certainly would have taken some of these other ones over here. Took the short, took the long there, and these are both, that was a medium probability trade because of that long green candle there. Medium probability to the short side. Um, and then this was a pretty high probability trade because it bounced off that support level, or that actually it was major support resistance. And then everything shifted, and we went to the upside and hit our resistance, and then took it here because of that 161.8 fib level, and overbought, which it hit over here. That was overbought, so it went to overbought again. So that was a fairly safe trade. Anyway, I think that's about it, guys. Um, have an absolutely wonderful rest of your day. And as always, as my friend Morali would say, trade green.